Welcome to Financial Literacy Class 101. Today we are having an overview of a person who wants to buy a car worth 1.8 million. Then he goes and picks a loan against his salary because he qualifies. Then person B uses the monthly installment that person A is reservicing the loan. He uses that money and puts the cash in money market fund. If you find this content resourceful, kindly leave a like and also your comment. Also share to your colleague or boyfriend or somebody who you find the content will be relevant. So what happens? These two people, for the bank to offer you a loan, your salary must qualify. So they have already gone a test and the bank has confirmed that this person, his salary can be able to service the loan of 1.8 million. Then person B, because they are in the same working in the same job, the same class, decides that the amount of loan that you are servicing your cash, I will put it in money market fund. So the cash is through asset financing. Kindly sit down, ensure you take your pen and ensure ours is to ensure you're financially literate. So confirm the figures. So this person is offered 1.8 million by the bank at a rate of 19.5% asset financing. So once they are offered that, they are told that the duration that they'll pay this loan is for the next 5 years. And the next 5 years is equivalent to 60 months. Then once you are given the loan, the bank has to deduct some things. One, the bank has to deduct 1% processing fee. 1% processing fee of 1.8 million comes to 18,000 Kenyan shillings. Once they deduct 18,000 Kenyan shillings, then they will deduct an excess duty. Excess duty, they normally deduct 20% of the processing fee. So the bank will deduct from that loan 3,600. Then the monthly installment will be 47,190. You get it? This is the amount that this person is supposed to pay, 47,190 for the next 5 years, for them to acquire asset financing of a loan of 1.8 million, which has been given at an interest of 19.5% for the next 60 months. So the interest that will be paid total accumulation will be 1,031,376. You get it? Now something, when somebody is picking the loan, you need to ask the lender or the bank, is it reducing balance? Reducing balance is normally you will pay, the interest will be much smaller, but now you'll not be required to pay 47,000. That is in case you want to clear your loan, and sometimes you have other hassles. This month you're able maybe to pay 100,000, next month maybe 90. If you are surpassing the required amount. But if you are not surpassing that, maybe your cash is it comes to the bank through the saving account, then you've given the bank an executive order to be deducting the monthly 47,090. That will not be possible. So this total loan will be paid at the end of the duration of the 5 years. This person will pay this loan total principal, total interest, total loan will be paid at 2.8 million 31,376. So the reason we are here, we want financial literate. So this person picks a car that is 1.8 million, but the initial cost by 5 years, he will have the total cost will be 2.8 million. Now let us go to this person B. This person B is able to know that you are paying a loan of 47,190 shillings. They are able to put that cash in money market fund. Money market fund normally compound daily. The interest is credited monthly, but the annual income is paid is calculated annually. So money market fund currently at Kenya, a money market that is regulated by Capital Market Authority, is giving an interest of 12 to 18%. Now we'll pick one that is paying 16%. Once you are given the interest per 16%, remember interest is credited per month, but it compounds on a daily basis. So once you to confirm these figures are correct, go to your browser, type compound interest calculator, then put as the initial amount as 47,190 shillings, then put the monthly contribution is 47,190, then put the duration is for the next 5 years. Once you put for next year, calculate at a rate of we are calculating at a rate of 12.5%. Why are we calculating at a rate of 12%? This one is after tax. You get it? I know somebody will ask me, what about tax? So once we join this money market fund that is paying 16% per annum, every month you get your cash, the interest alone, the government will be picking 15% withholding tax. For education purpose in this tutorial, that is why I've calculated money market fund is paying you at 16%. Now just to underrate, that is why we are calculating at 12.5%. Once you put these figures, getting an interest of 16%, then we calculate it at 12.5% by the end of 5 years. If this person is persistent, his cash will have gone to 4,020,610. That is the power of compounding interest. To find more details about money market fund, the way you can save 5,000 per every month, then by 10 years you will be having 1 million, there is a video. Find the video, find a video in my YouTube channel. You'll find amongst my video. Ensure you subscribe and share this content to somebody else. The reason I request you like is once you like this content, YouTube algorithm will suggest it to more people. So at 4 million, I'm sure you are seated, you're in the journey of getting financial literate, and I'm sure you are calculating your figures. So once we get the total, the initial principal was at 1.8 million. Remember, this person, like now we are in July 2024. Once we're in July 2024, this person has got his car of 1.8 million. Now this one has delayed. That's why we are saying financial wisdom is you go to buy something and know at the moment I cannot afford. Let me go back, set systems that I'll be able to acquire the same asset within 3 to 5 years, and I will also be having a stream of income, and I'll also have started a business. So once you meet this person, if a car that is currently 1.8 million currently, and let's say all factors of supply and demand stay constant, in the next 5 years we have to add inflation rate. We are saying if you put your money in the bank, it is losing 5.5%. That's the inflation rate. So let us inflate these 1.8 million so that we may know by this person saving the money in money market fund, and if they are going to buy this car, they also have an interest to buy the same car. You get it? So they want to buy the same car in the next 5 years. So we are calculating inflation rate of 1.8 million with a rate of 5.5%. You get it? So in the first year alone, the inflation rate will be 99,000 for 1.8 million. So we'll do 1.8 million plus 99,000. Once we come calculating the second year, now we want to calculate forward. Not inflation rate is eating money. So now we know that this money will, every year it's losing 5.88%. The second year we will add the 1.8 million plus now the 99,000 that was inflation rate for the first year, plus we add another inflation rate of 444,000. Now when we come the third year inflation rate, we will add the 1.85 plus the 99 plus the 104. The inflation rate for the third year comes to 110,000. Once we go to the fourth year, it means the 1.8, the 99, the 104, and so the third year, the inflation rate of all these amount 1.8, you calculate the amount that is going to lose the first year, the second year now becomes 110. Now for the fourth year is 116. The fifth year is 122. 122 means the duration. So it means the total inflation is 552,000. So 552,000 is 5% in every year of the total amount. Now because we are going to buy the car we are 2024 July, this person is going to buy his car at July 2029. So July 2029, the car that was costing 1.8 million will have to add an inflation rate of 552,526. You get it? So the total cost the total cost will for the car in the next 5 years will be 1.8 plus 5 will be around 2.35. You get it? So this car that you bought 1.8 at this moment, in July 2029, it will be costing 2.355 million. So 2.35 million we will deduct from the 4 million. Once we deduct from the 4 million, we will be getting something around 1.6 million. You get it? So 1.6 million, it means these two people, by the end of 5 years, July 2029, this person has used financial wisdom and known that regardless of my salary qualifying for this loan, I cannot afford it at this moment. By the fact that you can buy something does not mean you can afford it. That's why you're told if you cannot buy something twice, then you cannot afford it. You get it? They have realized that their objective in life is not only to have a car. They have other issues. They want their family. They want to financially grow. And one day they want to be financially successful. By July 2029, this person will be having his car, which will be 5 years old. Then we are not calculating that this person has a car. A car has maintenance. Once you have a car that is 1.8 million, the minimum you can maintain it is 15 to 20,000. 15 to 20,000. That is fuel, car parking fee, and maintenance. So we are only calculating 500 shillings per day. So every month this person is losing at least 20,000. You get it? 20,000. Why is it 20,000? 20,000 is to maintain the car. Then it for 60 months. 60 months. So this person, by the time we are getting to 60 months, it is coming to so this person A, by July 2029, they will have used 1.2 million just to maintain the car. Now at that July 2029, they'll have paid the loan. They have their car which is 5 years old and they have already lost 1.2 million. This person, it means by July 2029, they will be having, they'll be able to afford the car that you bought 5 years ago, now buying it at a price of 2.35 million. Then they have an addition 1.6. So 1.6 million, it means they can start a business. Then this amount that this person has been using to fuel, he will be able to use it to have that 1.2 million. Now that 1.2 million will not calculate it as money that this person will add it to this. It means that this car that he has now bought in July 2029, he will be able to maintain it for the next 5 years. You get it? So those are some dynamics that you normally check, and this is financial literacy class 101. I'll be happy to see you comment in the comment section. I'll be happy to see you monitor the numbers, because we are not coming to cheat you. We really want to be reality. So my advice is this: sometimes you have to be very bright. Instead of picking that mortgage loan, instead of picking that loan to construct for your parents the house, calculate the monthly installments and know once you save that money, in the next 3 to 5 years you will be like this person. This person will be having a car. July 2029, they will be having a car. They'll be having maintenance fee for the next 5 years, and they'll be having 1.6 million to start a business, or maybe invest the money but yet in another money market fund. So they'll be able to sponsor. If this person invests this 1.6 million in money market fund again, money market fund is getting 12.6% per annum. Per every month they will be getting 16,000. So if they get 16,000, it means that if this person plows back the cash to money market fund, the 1.8 million, without any hassle. Remember, money market fund, these are mutual funds that invest in short-term and long-term securities. So the cash is invested in treasury bills and treasury bond. If this person plugs the cash back in money market fund, per month they are getting 16,000. Yet this car, we had calculated to maintain the car, you need what? You need at least minimum of 20,000. So it means, you see the way things now are going. So this person, by the time they are meeting the next 5 years, this person now will this person A, who picked a loan of 1.5 at an interest of 19.5%, and they were paying installment of 47,000 per month, you will meet in the next 5 years, they now want to change their car again. By the time you are changing, this person has already attained their financial freedom. So it's upon you to know where you are. You get it? Me, I'm not an advocate. I don't want to drive the best car, but I want, at least as you are doing the things, the thing is to avoid struggle. You get it? We don't want to be in a place that you'll struggle so much in life. If you find the content resourceful, leave a like. Just comment. I'm open to criticism. The reason you comment is to award the hard work. We take so many hours researching before we bring this content to you. Financial Literacy Class 101. Thank you.